experts, many of them at your institution, do support nominal income targeting. And I'll just say that, we've looked at that, I've looked at that, and really come to the view that that nominal income targeting is not the right way to go. And I'll try to explain why. By the way, I know that these arguments are well known to nominal income targeters and will be found to be unpersuasive. But nonetheless, I'll just give you my
one thing I would interject is that we have debates internally as well. And I think for us.
And don't worry, guys, I'm going to translate all this to like English as soon as they're done. But I'm just trying to pick up as much key hints about Jerome Powell's stance on certain things like labor, like inflation, like the current state of monetary policy and other central bank focuses. So I'm going to translate this for you guys after, but looking forward to just seeing what he's saying and how it's going to affect the markets. We're about 3 minutes away from the market open. NASDAQ looking for a pullback to the 12,250 region. At 12,250, if we see this rejection, I'm looking to short this thing down. We might not get a spike at the open, but never say never. This thing could continue to print to the downside, but one spike would be ideal. Same thing for U30 in case you guys are trading those. I'm waiting for a pullback on U30. Back up to these highs, basically. If you guys can just draw a zone where all these wicks are, it's essentially around 31,550 shorts for US 30. So as soon as this thing curls back up, I kind of look like this. SL above the high. It's about 130 points. So this is not like a, it's still U30 that we're trading. But I am expecting this to break lows, even though we do have a nice structural zone here that price could get stuck at. This would be an area where we take partial profits. But I do expect price to continue as long as the economy is the way it is. So there's no reason why we don't hold these things for swing trades. So let's see if we get a pullback next few minutes. We'll keep an eye on it. Euro USD retracing a bit. I've already booked some partial profits. We got a pretty nice entry. We were up almost 90 pips. So I did manage to close some partial profits. My stop loss isn't break even, but I do expect this thing to run as a swing trade. So let's allow this thing to continue to push. All right, let's get back to the Fed talk and see what Jerome Powell and what the Fed has to say.
Wanting to socialize a number of alternatives and try to move towards alternatives that do have more of a market basis and again, remove discretion.
I think it's a very healthy process, and the whole debate over many years about rules and discretion is a fascinating and important one that is far from over. So it's really a mix of the two. I think but getting to nominal income targeting, we've got a dual mandate: maximum employment and price stability, and it comes down to is nominal income targeting the best way to promote that? We don't think it is. I don't really think it is. And part of that just is that it would be, I think, very difficult to explain to the public the relationship of a nominal income target, nominal GDP target to those goals. It's just, it's a level of complexity that, even some economists and policymakers struggle with, let alone the general public. So it seems like it would be a reach to sort of put the, for us to have that be our fundamental framework. And a couple of examples that would be difficult. One in particular would be, what do you do with changes in trend growth? We have, highly uncertain estimates of levels of trend growth that we amend down through the years, and many years later, we may have a very different view. But it is broadly understood, I think, or thought that trend growth has declined consistently, or considerably rather, over the course of the last, since the global financial crisis. So how do you incorporate that into a nominal income target? Do you just raise the contribution of inflation, or do you annually re-estimate trend growth? And if you do that, you're incorporating both communications issues, but also, big chances of policy error, because we just don't know these things with that kind of. We don't know any of the star variables, so to speak, with that level of certainty. So I'll just say it's really interesting, and it works very well in models, but it seems difficult to implement from a practical standpoint, and it's not something that we have chosen to do or that we are currently looking at.
You mentioned a dual mandate. I don't want to ignore the unemployment rate during this conversation. when I said earlier that, we obviously have an aversion to a, fully discretionary monetary system, many of us also regret the adoption of the new mandate in lieu of a strict focus on monetary stability. The Fed's own website acknowledges that maximum employment is driven mainly by non-monetary factors. And if we accept that, does it really make sense for employment to be part of the Fed's mandate?
So Peter, as you know, we're created by Congress in statute, and Congress assigns our goals, and it has assigned maximum employment price stability. It's my view that the dual mandate has served the public well and is generally workable. In particular, at the moment, I don't see the two goals as in conflict at all, because without price stability, we will not be able to achieve the kind of strong labor market that we want for a sustained period that benefits all. So I don't see a case for moving to a single mandate, but that's really a question for Congress, and we will of course implement whatever mandate Congress gives us. To your point about maximum employment, it's true that, and we do say that and have for some time, that non-monetary factors are really what drives the level of maximum employment, which clearly changes, through the business cycle and over time. But we can and do assess that, and we do it transparency, and Congress has said that should be a goal, a co-equal goal with price stability. So that's what we're implementing. And again, I don't think there's a strong case for changing that. I don't think it hampers us in our pursuit, and I think we can achieve both goals in the medium term.
You stole my follow-up because you started out saying Congress sets the mandate, and so my follow-up was going to be, well, should the mandate, should they consider changing the mandate? I think you've answered that, but I guess a natural follow-up might be then that if the dual mandate weren't enough, there's been talk of adding more elements to Fed's objectives.
Oh, Big Powell with that cough. What's going on? Oh no, that's somebody from our chat. But I'm over here thinking that was Jay Powell coughing like that. I was like, yo, markets are bearish. As soon as Jay Powell coughs, it's game over. Turns out somebody from our own chat. So basically, guys, this guy on the left is representing the Cato Institute, which is a research institute for finance and economics. He's talking to Jerome Powell about the idea of even having a Federal Reserve, what their purpose is, whether the dual mandate is an appropriate thing for them to pursue, and whether that's something that is beneficial for us or whether it's a hindrance on the economy. Jay Powell says, leave me alone, fam. Congress sets our mandate. They told us that we're good to go, and we're going to keep doing what we're doing. We've been running since the 70s. So they're kind of just having a debate about whether the Fed is even necessary. And that's kind of crazy to even think about, because no Fed chairman has ever entertained the idea that the Federal Reserve is unnecessary. They've all believed for years, that the Federal Reserve has never admitted that, they've never even entertained this kind of question. It's just crazy to see a Fed chairman talk like this.
It's regulatory responsibility.
He said, cough equal bearish. Y'all have no idea. They used to, we used to look at, guys, there's algorithms that track everything, his facial expressions, the amount of times he smiles versus he frowns, the color of his tie based on the sentiment in the market. Everything is on the table when people are analyzing sentiment, because it's just about how people feel. If someone, if an institution is looking at what Jerome Powell is saying and he's saying it kind of nervously, they'll take that into account. So it used to matter a lot more. Now things are a lot more stable because Jerome Powell watches his every word and he reads off of the binder. So at this point, it's a little bit different. But back in the day, everything that he did or said used to move the markets.
In effect, mandates not undermine focus on that fundamental responsibility.
Also, it doesn't look like we're going to get this pullback on NASDAQ yet. I think once we reach down here, we'll get a sharp pullback. So give this one a second.
I would not want to see it narrowed or broadened for that matter. We've got narrow and we've got well-defined goals that we're supposed to pursue. And what we've gotten with that is a precious grant of independence that lets us pursue those goals without direct political control. For monetary policy, that's maximum employment, price stability. And I think that dual mandate has served the public well. I really don't think it would not be a good idea to broaden it to goals that.
So side note on EU, we're sitting at this daily zone here. So you guys can see massive daily zone, lot of contention here. from buyers, and price is right back at the zone. So in order for us to really confirm that sell trade and for us to get a follow through, we do need to close below this level. Previous daily candle was aggressively bullish. So in order for us to really continue with this trade, we do have to close back below the zone and ideally break the structural level. Once we break the structural level, we have plenty of room to the downside for our next extension targets. So for now, still in EU, it's at this area of contention. So if it starts to wick back up, don't panic. This is not an indication of a reversal of our trade, but just be mindful of where we are in the big picture. We are at a major daily zone. So this is not an area where you'd want to be adding positions. It's an area where you'd want to be taking partials and allowing the market to either break or bounce. So this is where the patience comes in.
Might be inconsistent with those two mandates, and that would be very difficult for us to achieve with our tools. More broadly than that, though, I think it's really important that we stick to our assigned tasks and resist the temptation to take on issues that are the province of elected representatives or Congress. And if we do that, if we do stray from our mandates, that will eventually undermine the case for our remaining independent. And I think, Fed independence is an institutional arrangement that has served the public well. And I think that's pretty well documented and accepted.
I mentioned a couple of times in our fully discretionary system, and one of the biggest of those concerns is that in the face of large economic dislocations, we've been running what really amount to unprecedented experiments. I would cite the quadrupling of the Fed's balance sheet in the wake of the 2008 financial crisis, and then doubling it again during the pandemic. To your credit, it was right before the pandemic that you were beginning to move towards reducing the balance sheet. Can you shed some light for us on where you hope to take the balance sheet over time? And
so this is the big question.
This is the big question. Try to get there. You see the Fed ever moving back to a scarce reserve framework like it had before the 2008 crisis?
Sure. So in the last cycle, after we ended our asset purchases, we froze the size of the balance sheet in 2014 and then allowed it to shrink passively relative to the size of the economy for about 3 years. So as the economy grew, the balance sheet didn't grow. And then in 2017, we began to allow maturing assets to run off, and that process went on until 2019. By the end of that period, we had a balance sheet that was significantly smaller relative to the size of the economy and smaller than it was overall. So then we resumed asset purchases, as you know, 2020, and once again now we are embarked on shrinking the balance sheet, and the test will be back to levels that satisfy the public's demand for our liabilities. That's currency and reserves and things like that, but also with reserves maintained at levels that are consistent with our ample reserves regime. So the balance sheet is substantially larger now, obviously, and consequently the runoff process is designed to be substantially faster than in the last cycle, to the tune of on the order of $1 trillion of runoff per year. That process began in June, once it's up to full speed. The process began in June, and the pace of the balance sheet increase actually rises this month. The plans are spelled out in detail on our website around the January and May meetings. And of course, one thing we always say is that we're prepared to adjust the details of the plan based on economic and market developments at any time. As far as returning to a scarce reserve regime, I guess I would say that I think that our current operating framework is a better one, and I don't see a case for returning to scarce reserves. Now, why is that? So the world has really changed as a result of the global financial crisis and the pandemic. The scarce reserves framework would be challenged to work in a world where there's very high and sometimes volatile demand for safe and liquid assets. Central banks may need to rely on large scale asset purchases again from time to time in response to severe shocks. And remember that the large financial institutions hold very, very large quantities of safe assets now as a liquidity buffer, and that includes a lot of reserves. So the bottom line is that the quantity of reserves is just so much higher. It would seem to be impractical to try to manage scarcity, and demand will be volatile too. So it doesn't seem practical. And again, we think that the current system works well and provides a lot of liquidity to the system, which is kind of a net gain.
I thought it might be time to shift gears a little bit away from inflation and monetary policy. I remember in the first year I joined Cato, I read an op-ed in the Wall Street Journal advocating for the Fed to implement digital currency. And I was kind of horrified at the privacy implications of this prospect and said so in a letter to the editor. Since then, the Fed has formally stepped into the digital currency ring, and digital currency has obviously been a very recurring theme in these conferences. But the Fed has stepped into this arena with a discussion paper.
All right, so we're getting these retracements.
In several speech.
We're getting these retracements on a few of the currencies. So I see NAS pulling back now. It's probably going to take probably 30 to 40 more minutes for price to reach up here and give us a rejection. EU retracing off that zone. Nothing to worry about yet. As long as we close below these candlesticks, this previous area of consolidation here, we close below, then most likely we're going to get one more pullback and then more downside. So it's a swing trade. We're going to have to hold it, give it a little bit of time to play out. NAS and U30 lining up for these entries. The only reason I'm not too confident in these shorts just yet is because I'm looking at the SPX trade. And what I'm seeing here is that we had a massive, and SPX is kind of like it's very similar to US 30. US 30 is the top 30 stocks in the industrial sector. S&P 500 is the top 500. So it's like the top 30 plus another 470 random, I don't want to say random, but some of the top companies. So I'm going to use SPX here. We have a massive daily zone here. When prices are sitting above it, using it as support, we tend to push up. When price is below it, we tend to sell off. When price is using it as support, we push up. And right now, price seems to be pushing as support. This bullish candle that we have here engulfed the previous 1, 2, 3, 4 candlesticks. So this yesterday's candle engulfed the previous 4 days. And what we're seeing now is this potential higher low forming. This potential higher low forming for a continuation. Now, the only reason that I'm looking at the sells is because NASDAQ and US 30 at the market open had massive sell-offs, and we managed to close and reject below these key levels that we were watching. So it's, this bearish sell-off at the market open is indicating sells on U30. NASDAQ, beautiful closure below this previous sell zone. So a retest of it and a closure below it would indicate further shorts. So NAS and US 30 are showing me a little bit more clear shorts. SPX kind of looks like it wants to go to a higher zone first before we drop. Maybe the 4,000 level flat. A little bit of conflicting signals here. All in all, the direction still bearish overall. And so I'll be looking for a sell to the downside first. If that doesn't work out, then we can reassess the directional trade. But for now, I do see shorts coming in. So what can we do here on on NASDAQ? Measure the recent impulse with a fib. We have the 78 and the 88% fibs, common reversal levels for NASDAQ sitting right here at 12,260. So when price comes in and crosses this level, we'll see if we can take a trade. If there's a rejection, there's no rejection, guys. Obviously, we can't just take random trades. So we'll wait for that trade to push through, keep an eye on it, and let's see if we get a position here. Bullish DXY equals bearish indices. Not always, but lately, yes. Because people are going to sell off their stocks to get into the dollar. The money has to come from somewhere. I like 12,230 on NAS. Yep. Seems like Powell's trying to delay the inevitable for as long as possible. That's his job. I mean, that's a Fed chairman's job, is keep the show running and don't fuck it up for everybody else.
Institution, not political institution, that we can do these things, and I hope present conclusions and analysis that will support an intelligent decision when it's time to make that.
Also, what's up, everybody on YouTube? If it's your first stream, my name is Roy Jr. I'm the co-founder, CEO, Chart Addicts, the #1 education service for traders worldwide. We're going through news right now, live trading. Only positions that we're in currently is EURUSD, but we're looking to short the stock market. We're looking to short the stock market indices on US 30 and NAS 100 here shortly. If you guys are watching on YouTube, just make sure to drop a quick like and subscribe. Let folks know that the stream is happening right now. Let's go ahead and keep watching this news and see how it's going to affect the markets.
Earlier this year became my son-in-law. So that's a little bit of a disclaimer I'm going to put out there. But without debating merits or future of cryptocurrencies generally, or one or another crypto products, I'll say that in the monetary arena, Cato stands for nothing if not a desire to see more interest in monetary policy, to see more people concerned about our discretionary fiat system. And also, we want to see private market innovation and experimentation in developing alternatives. And crypto is just such a great example of this. There's a long history of government and regulation thwarting such innovation and experimentation, which we find really disappointing. So I wonder if you could respond to these kinds of concerns, namely.
Yeah, and this dude's asking all the right questions. I actually really like this.
To the extent that it really does develop into a viable.
This is like the real fucking discussion. This is what we need to be having right now.
I'm talking about in two pieces. One is unbacked cryptocurrencies as such, and those have not and don't appear to offer, have not offered and don't appear to offer much in the way of public interest in using them as payments. Let's say it's not a great store of value. What it is a speculative asset. It's not backed by anything.
There could be an argument that that's still during the development phase, and that it's something that we can see emerge. But
yes,
yes, it may.
And I also have close family members who offer that perspective vigorously, so, as you suggest. But stable coins is a different thing. And, the question is, are there forms of private money like stable coins which can play a role in our financial system, which would, and the answer is, of course, that we don't want to stand in the way of appropriate innovation, particularly including, digital innovation. But we think that something like that, which is, purporting to be money, would need to be appropriately regulated. And I hear that wide agreement on that, by the way, from a lot of the stablecoin companies now are seeing that as part of getting to a place where they are a legitimate part of the financial system. So I think you need regulation. If people are going to think something is money, then it needs to actually have the qualities of money. And if it doesn't, then you don't want. I don't think you want to take money and make it into just another consumer product where something.
All right, we are seeing massive spikes here. Dollar just had a quick wick form on the higher time frames. This doesn't necessarily mean it's going to go bearish. If you guys look at sometimes during news events, you guys can see the dollar will have these massive pushes, but as long as it's creating higher lows, it'll still push to the upside. And so this is not necessarily a bearish sign yet, unless we break these lows. If we violate these lows, it's a different story. The reason we're watching the dollar is because it kind of decides everything else. And so as long as the dollar continues bullish, our EU trade will drop. Look at this wick on EU. My God. I really need price to close below this support level here at the 998. If it closes above, that's not a good sign. It shows that we can potentially push higher. Yeah, we got a cool 90 pips out of this trade so far, but crazy. So right now, NASDAQ testing the 61. There is a potential entry here, but I really feel like waiting for the 78. Yeah, it's a huge difference, guys. Look, this is like an almost 6-to-1 R&R trade. If you wait for the 78%, if you enter where it is now, the risk and reward goes down to 3.5-to-1, which is still a good trade if it runs all the way, but you really want some of these better R&R trades. So one more push up, and as long as we close below this entire level, it could play around here, it could play around here, and then we can see a push to the downside. If we start to close bullish, like where people ask me, Roy, when is it going to be bullish? Like, how do we know when it flips? You know when it flips when we close above this area right here. If we close above this region, then yeah, the market's gone bullish. But until then, it can play around this entire zone before it drops. And so that's fair game. We don't want to enter too early so we don't hold a bunch of drawdown. So let's wait for the market to spike through and then close under, and that should give us a pretty good opportunity to enter the short. I'll give you guys a heads up if I enter the short or when I enter the short.
concerned about the day of reckoning and what risks we're laying for the economic well-being of future generations. And I just wonder, your thoughts on those concerns and the potential timing of that day's arrival and its consequences, and whether you have any ideas about how we can build a real constituency for fiscal responsibility in America.
So I do share those concerns. And in fact, I was working on those issues before I joined the Fed. But at the Fed, my position needs to be that fiscal policy really is the responsibility of Congress and the administration. To comment too much on specific policy proposals or laws. More to the point, with inflation running so far above 2%, this is probably an especially good time to focus on achieving our own mandate rather than doling out advice to others. But like my predecessors, I'll point out that our federal fiscal policy is not on a sustainable path, and it really hasn't been for some time. And we will need to get it. We will get back to a sustainable path sooner or later. To your point, sooner is better than later. And I guess I'll just leave it at that.
All right, so I'm going to enter a small position here on NASDAQ. I'm already running pretty deep on Euro USD, so I don't want to overstretch myself. So what I'm going to do is I'm entering a position now on NASDAQ, but it's not going to be a full position. So whereas I wanted to enter like a 0.3 lot size, what I'm going to do here is just enter a 0.1. What that also does, it gives me an opportunity to have more ammo in the vault. That way, if this thing pushes up a little bit higher, I can enter another 0.1 potentially at the 88, and then have an even better position on the next one. So I just entered a piece of my position. Accept the risk of these trades, y'all. If we're trading news and there's a massive bullish spike happening, granted, like everything is still lining up bearish, just make sure you're accepting the risk. This thing could still pop up. We haven't had a clear like a candlestick rejection or a closure below this zone. So as of right now, we're still sort of taking an anticipation trade. The anticipation trade is like, yeah, it might play around here, but at some point it's going to close under. Versus a confirmation trade where you wait for the candle to print and confirm that the market is closing below before you enter. Anticipation trades are a little bit higher risk, but you do tend to get better entries. So that's kind of what my the framework that I use when I'm trading the market open. So my position is in. I'm going to allow that to run. And I'm going to place my stop loss above this previous swing high. That's about 90 points. Maybe a little bit more depending on your entry. Stop loss 12,338. Okay. And we just gotta have a little bit of patience here. This is what we want to see on Euro USD. Yes, we had a nice spike up, and this is exactly what we're trying to see on NASDAQ as well. We had a nice recovery back to the upside. It retested the previous candle and then wicked down. Hopefully this thing continues to drop like this, and we can get a continuation and a follow through of the Euro USD shorts. NASDAQ expecting the same sort of movement where we can hopefully reject that previous bearish candle and wick to the downside. Doesn't look like it. Looks like bulls are getting ready to win this game, y'all. Euro USD still closing below the zone for now, but yeah, if NASDAQ closes above 285, I'll be looking to close the trade. So we'll give this thing a little bit of time, see if it rejects the 88.6.
Sure, the economy and the path ahead. That makes our work challenging. It also makes it getting it right very important for the people that we serve, and we do think about that every day. So our understanding of the economy has to evolve. As the economy evolves, as time passes, we do learn more. And I think it's okay to follow the evidence and change one's mind. I think advice to scholars young and old is that people shouldn't be afraid to say that they've changed their view and explain why. I actually find that refreshing when people say, you know, my view has evolved in the face of the evidence. I guess one more word to close for those young researchers you mentioned. And this is a commercial for public service and for the Fed. So the Fed is a very special place where people can combine policy research with policy making. This is a place that has, and all of us have a very strong sense of mission in our work, which is very satisfying. And that mission is to serve the public. And it really matters. Our work really matters to the public. I would say there's no higher calling or more satisfying mission. So I hope that young researchers and economists and others will consider public service as part of their career. For me, it's been only a part. But in particular, consider working at the Fed, where you'd be most welcome.
Thanks for that. I mean, I share those sentiments. As you know, you mentioned your work at the Bipartisan Research Center, and I'm at Cato because I care about the future of our country and the future course of liberty and freedom in America, and for the kind of world future generations are going to grow up with, that they're going to have the same opportunities that we all have had to live in a free country and to pursue their American dream, and being part of that is a real privilege. I know, at Cato, we work very hard to raise consciousness of monetary policy and the potential for monetary reform. We think this is a very important topic, and that more Americans should pay attention to it, even though it's complicated. We wish there were more policy organizations that would prioritize this policy area and raise the level of resources dedicated to this area. And as you know, Mr. Chairman, Cato is not shy about being, and we enjoy intellectually jousting with you and your team, but we also recognize that we share common goals and objectives for our country, and it's in the country's best interests, by which that jousting and those debates and areas of disagreement, it's within that context that they occur. And so I do thank you for your work. You're in a challenging position, and I thank you very much for being part of this conference today. It's been a real pleasure.
Thanks, Peter. The pleasure is mine too.
Thanks so much. And with that, I'm just going to let all the viewers know that we're going to be taking a break now until the top of the hour. So we're going to reconvene with the next panel at 10 a.m. So we'll see you then. Chairman Powell, thanks.
All right. That was a great discussion. That was a great discussion. Big topics. They talked about some big topics. They talked about whether the Fed is necessary. They talked about whether monetary policy needs to change and all this stuff. Pretty interesting. Like I said, the most interesting thing about these sorts of conversations is not the subject matter. I mean, the subject matter is obviously what makes it so fascinating, but it's the fact that Fed chairmen usually do not engage in these sort of like philosophical conversations about the purpose of the Fed. Like, you're basically like, I don't know, you're kind of like talking shit about your own team, basically. So they don't typically do that. Just to see it happen live is a little bit interesting, and just kind of shows that like Jerome Powell specifically, as opposed to all the other Fed chairmen that have come before him, is a little bit more focused on the end game than everybody else might have been. The end game being, how does this whole monetary policy roller coaster end, with us printing money, not printing money, and everything in between. I'm gonna let you guys know right now, not really liking this closure. Really want to see a rejection, a little bit of a deeper rejection. So this next candle, it could push through. As long as it closes below this zone, I'm staying in the trade. If it pushes up and starts to close below these previous candlesticks right here around the 270 area, I'm gonna just close my trade. All right, so let's give it a sec, see if we get a follow through. And I'm not looking to hold this swing trade. Maybe you guys can hold the runner if you'd like, but I'm a little bit more interested in just catching a scalp right now with you all and then getting out of this trade. Let's see if we can squeeze a good 600 pips, sorry, 60 points out of this trade. So far running about 30 points. All right, we're looking pretty good on this. So that's a quick 30, 40 points. No, hold on. 22 points. That's my personal entry. I'll just show you guys my entry. Oh, hell yeah. Okay. We just hit a quick 30 points. So what I'm going to do is I'm going to just close half the trade. Not that 30 points is something crazy. Like I'm not really tripping over the 30 points, but just more so we got the rejection. Yeah, we got the rejection that we're looking for. We got one push off. I'm going to take some money off the table and I'm going to let the rest ride. All right. And that's our follow through. Really, right as I went to close the partials, it just dipped down. So we're floating about 50 points right now from the entry. This was a pretty straightforward trade. I mean, I feel like it went exactly as we described right before it popped, which is basically where it was retesting the zone. There was going to be a liquidity grab through the zone, which is important. That kind of further confirmed the trade. We had this candle close below the previous area of structure, which is a pretty good sign. And we basically just had a flip from the 78% fib. Right now we're sitting at the 50%, which is usually where you'd want to take partial profits. If it's going to go bullish, it's going to sit around here and create a wick and then push back up. If it's bearish, what's going to happen is it's going to close below the structural level. So that's what's going to indicate to you whether you should hold or close is if this thing creates the wick and a higher low, then there's a good chance that it could still flip. However, if it closes below this level, you actually have a pretty decent amount of room to the downside. That could be a trade that you could hold potentially for the rest of the day. Can we turn this into a swing trade? I mean, shit, potentially. So who took this trade? Did you guys take partials? Let me know some of the decision making that you guys are going through. All right, Jesus. Yeah, I'm going to hold my runner, guys. I think I'm going to hold my runner. I mean, it hasn't closed below the zone yet, but this thing is looking pretty aggressive as far as I can see. We're floating about 70 points in profit, quick 70 points and running. I'm in Naz. I said hodl. I'm in and I took partials. Bianca, beautiful. Sam said waiting for closures, beautiful. Darren said scaled in. Good stuff. If you got a late entry, make sure that you're protecting yourself and you're taking partials because retracements are very common with these pairs. So that's good stuff. So I only put a 0.1 here. I was going to put a 0.3. I put a 0.1. When it wicked up, I should have entered another trade, but I was like, you know what? I'm already deep on EURUSD. No reason to over risk. Price push down. I closed the 0.05, still holding a 0.05. People, if this thing runs down to target, that's thousands and thousands and thousands and thousands of dollars off of 0.05. So I'm kind of litty right now. Floating about 3.3K total on the EURUSD trade. Floating about $300 in profit on the NAS trade on a 0.05 nonetheless. Rodrigo said waiting for closures to make decisions. So what are you waiting for exactly? And what action will you take once you get the desired indication on the chart? Oh my God, let's go. This is what you want. We had that massive liquidity grab or this massive wick back up and we're filling the wick. So that's good. So far, so good. And I want everybody here to learn this. Look, I don't want to give you guys too much sauce. There's Chart Addicts members on here, yes, but we're on YouTube. So I'm going to just keep this kind of light. I'll go through this on a call tonight, everybody. But you guys see this. Oh my God, we formed a high. Wait, liquidity grab and drop. Oh, wait, we formed a high. Oh my God, liquidity grab and drop. I need you guys to learn that double top pattern. And the double tops, as you guys can go through the course, like when you go through the mastery course, where's it at? Where's the mastery course?
I think it got taken down with the site update because I've been looking for that recently.
Okay, that's not cool at all. All right, give us a second, y'all. We're gonna get this thing back on the website as soon as possible. We have our own tab. I was trying to show you guys the double top pattern, but basically double tops don't look like they do in the way that most people show. What happened? Oh, yeah, they don't usually look the way that they show in the textbooks. You're gonna see these dislocated right shoulders, you know, before these moves happen.
All right, give us a second, y'all. We're gonna get this thing.
My God. You trade breakouts? Normally, no, I don't. Much love, appreciated for everything you're doing for the community. It's my pleasure, y'all. You guys know I love doing this. You act like you the banks. I don't even know what that fucking means. Dude, Frankie, kind of an idiot. First time during your live. Thanks for sharing all your trade ideas, man. No problem, Tom. That's what we do this for. I'm gonna show you guys how to really trade. I know a lot of you guys are in these signals groups or potentially these like trading groups, and they're not really giving you guys like real trades that you can make money on with proper risk and reward. So that's really our priority. It's like through the Enigma FX app, which you guys can get a 30-day free trial. 30-day free trial. I'm gonna put it in the YouTube comments here. That EURUSD trade was called on the app. And so like we're trying to provide trades that have a great risk and reward, that don't spend a lot of time in drawdown, to hopefully show you guys, one, how to trade, but two, more importantly, how to take advantage of trades that can make up for a bunch of losers. Like one great trade with a 5-to-1 R&R can make up for 4 or 5 losers. That's just the way it is. Said I wasn't talking about you. Damn, my bad, Frank. I didn't mean to call you out like that, bro. It's all love. This is a perfect break and retest Lambo Raul style. Well, I'll be honest, I don't think Lambo Raul invented a break and retest, but if that's his strategy, more power to him. How much are you floating right now? About 3,700. Well, actually, I have to check. I gotta check to see how this thing closes. Currently, with both of the trades, I mean, NASDAQ is retracing pretty heavy right now. It's still below my break even. I'm still gonna hold this thing. I'm floating about 120 bucks on NAS, and I'm floating about 2,500 on the EURUSD trade. $2,800 total floating right now. All right, and this is why we take partial profits, y'all. You guys see this retracement here? If the market's going to flip bullish, it's going to be from here. If it's going to continue bearish, then it'll just fill these candles, no harm done. But if it's going to flip, then we at least want to make sure we took partials at the very bottom of that candle. Not over here where we take partials, we're screwing ourselves over, we're taking little money, but down here at the 70 pips. So when you're using your Fibonacci levels, that's how you can start to take advantage of certain points that are potential reversals. And so instead of getting caught in that wick action, you can get out, let the market wick up, and potentially even re-enter. Smaller time frames looking pretty good on EU. Everything looking good. Bada boom, bada bing. US 30, same thing. We got to pull back. We never pulled back to the zone I was looking for. We just pulled back to the 50% fib, but US 30 is looking pretty ugly. Not as clean as NASDAQ right now. NASDAQ is looking the cleanest out of all the pairs. EU, let's keep the shit going. Roy, I never got an email back about the winning raffle. Tab, this is your Tabitha, right? Did you email us at the info@chartaddictsfx.com? If so, please just send a quick follow-up email. I'm going to text my team right now, make sure to keep an eye out for it. If you guys win a raffle on our streams, best believe that you guys are going to get your raffle results. He says, what the fuck? I'm sorry, Frank. I didn't mean to do you like that. Yo, he said, I'm waiting for Naz, watching Naz. That Naz wick is nasty. That's what we call her, Nasty Naz. Says, yeah, Enigma, let's go. Bringing my funded back from life support. Cole, I love to hear it. Send us some of your results, guys. If you guys are using our services, if you guys are enjoying your time on the app, if you guys are like, you know, taking advantage of all these banging trades, you don't even have to post it on socials, but like send it to us. You know, we love to see that people are winning. That's like all we do this shit for. You guys have no idea. When I lose a trade on the Enigma app, I feel like shit. I'm like, wow, I don't want people to lose money with me, right? Like that's just not, I want to make the trading world a better place by just giving folks a real avenue to make money, not just to learn stuff all the time and just like to go through hypotheticals, but just to really, really rack in these consistent trades. So if you guys are winning and you guys are using the services, let us know. We got a lot of joy of seeing you guys winning. Like big trust. It's what keeps us going. Didn't find your course also on the website. Yeah, the mastery course is not available right now for some reason. Now my personal course is still on here. So there's volume 1, volume 2, volume 3. The volume 1 course is, to me, the best Forex course out there available ever that's ever been made. Section 1 is mostly about analysis and understanding markets, like cycles, analysis, technicals, candlesticks, mastery, trading view, how to like set up your trading view and everything. Section 2 is about execution. And so this is the part that I want everybody, like the Chart Addicts members, to go and review this shit. Really go and review this stuff every once in a while. Steps to entering a trade, your trader's profile, your risk profile, your personality profile, how much to risk on your account, win small, or sorry, risk small, win big, R&R explained, MetaTrader tutorial. Like it's really going to give you everything you need to make money in these markets. So even though the textbook isn't here, there's a lot of game in here that I feel like folks skip out on. All right, NASDAQ still running, EURUSD still running, looking pretty good so far. Also, if you guys are watching this on YouTube, I don't know if you guys are frequent or if you guys are new here, but we do host a podcast with successful traders on it. If you guys are interested to hear, not just from myself, but from successful traders on my team, from successful traders that I know in the industry here, go and check us out. It's called the Expert Trader Podcast. It's a very fitting name because obviously we try to get on expert traders. Last week we had one of my day one mentors. Like I don't have a lot of mentors, y'all, because I'm not one of these people that like, you know, had people around me really guiding me and doing stuff like that. I only bought one course in my life and that didn't really teach me much. I did learn a lot from, so I was in, just to give you guys the backstory on me, I know I don't really talk about myself much, but before I started working at Merrill Lynch, before I was even a wealth manager, while I was still in school, I had one of my friends, Joseph, who's a coach with us at Chart Addicts now. He introduced me to Forex through IM. Back then it was IML. So I didn't really learn much from the courses besides a little bit about the background and history about Forex, but I did learn a lot from some key players in there. And so I would say Lisaldo Tavares, who I've had on the podcast twice now, incredible guest, incredible mentor of mine, and has, you know, really helped shape my understanding of trading. And Abel Melendez. And a little bit of Luke Longmire. I'll put Luke in there. He started a group chat, put some of the best traders together. That was awesome. So what I learned from them in that time that changed my life, and I realized that I was more skilled technically than most people on the charts. And that was just a function of how much I loved this game. If you guys love trading, the few of you guys that are on here that genuinely, like most of us people, we're just trying to make some money. But for the few of you that actually love this game, you're going to realize that your technical analysis is going to outpace everybody around you by 10 times. But it's not going to result in you making more money. And that's the biggest fucking thing that I had to learn. So what I learned from some of these guests was like, or not some of the guests, some of my early mentors, was to stop spending so much time on the charts and to start making money. Like making money means we entered the Euro USD trade earlier. That was the only real decision we had to make. Since then, the market has done all the work. And understanding that I wasn't working for the money, that I had to allow the market to really develop and to do the work for me, changed my life completely. So I started spending less time on the charts and I started making a lot more money. Now, if you're in the learning phase, you do need to spend a lot of time on the charts. You have to get your reps in and you have to watch live market action. I'm not talking about go and back test imaginary things. I'm talking about really watch markets live and not just trade. Like you can trade demo and really understand things mechanically, but just watch the markets and build your memory bank. The memory bank says, like, let's say that you're watching this, and this is a great probably exercise for a lot of people to use, where you're watching the charts, but you're not entering any trades. So let's say that you take a paper trade. A paper trade is a hypothetical scenario that you set up where you say, if the market comes to this level, I'll take a trade. But you're not entering anything. Okay, you're not actually entering any positions on any app. So here's my hypothesis that the market's going to pull back here and then drop. And this is my hypothesis. So what I'll do is I'll just basically wait. You don't have to watch it. You can come back every 30 minutes, every hour, every 4 hours, depending on the trade. But if the market does play out like this, what happens in your brain is that you build a memory bank of this trade going the right way. So you say when the market is sitting below a specific zone and it comes up to retest, it kind of looks like it's going bullish, but then it just starts to close below, that equals the market's going to continue. You have now built that scenario into your memory bank, which is absolutely priceless. So a lot of trading, you guys will see that as you get better and better, and as people start to trade longer and longer, the 3-year mark, the 5-year mark, the 10-year mark, whatever it is, what's really happening in the back end is that those individuals have now built a consistent memory bank of scenarios that they can pull from. Why is the memory bank so important? Because when you have a choice of close, hold, open another one, or just let it go, take partials or not take partials, when you have those decisions, having a memory bank is going to allow you to make the right decision by default. Sometimes, y'all, I enter a trade. I don't really know why I entered the trade. I'm just like, I mean, I know why. I have the technical reasons, but there was another instinctive or intuitive push that encouraged me to take the trade. That intuition is nothing more than your subconscious mind, which stores all the memory, letting you know, hey, you've seen this a million times before. Take the trade. And so the more in line that you can get with your intuition, and the more that you can build a memory bank of consistent, and like when you're building the memory bank, you can't just sit there and watch it and stare and turn your brain off. The times that you're on the charts, you have to be conscious. You have to be awake. You have to really, really pay attention to the information. That's how it gets stuck in your long-term memory. If you're just watching this shit up, down, you're getting emotional, you're not really seeing the charts clearly, hate to break it to you, you're not going to be learning much. So conscious interaction with the charts is what builds your subconscious memory bank. And then your intuition is what's going to be giving you those signals to make certain decisions on the charts. So that's 2 parts. A lot of the reason that you guys see people working out, you guys see a lot of traders meditating, you see a lot of traders working on personal development, you see a lot of traders eating healthy, you see a lot of traders, doing all these different things, is to give us an advantage to get better in tune with our intuition, because that's what's going to guide our decision making on the charts. If you want to make shitty decisions, I'll give you guys a recipe. Go eat unhealthy ass food, get shitty sleep, and then don't get any exercise. Stress yourself out with a bunch of other stuff before, and then hop on the charts. Right? Now, you're not going to have any good ideas. I can almost guarantee that. Versus you get a good night's rest, you have healthy food, you do things to make you a little bit more energized, you get your blood pumping, and now when you sit on the charts, the decision to close or hold is now a lot more obvious, because you're free-flowing information from your subconscious mind to your conscious. That was a bit of a side note, y'all. This is also the purpose of meditation. A lot of people say meditation is like sit there and breathe and all this stuff. Really, what you're supposed to do is focus on one focal point, whether it's a sound or whether it's like a number or something that you just like consistently do, like a mantra. And the whole purpose of that is to remove the clutter from your thinking and to give you a better access to the free-flowing information from your subconscious memory bank. So, meditation and trading kind of go hand in hand because you're really trying to pull that information in. Big key for a lot of you guys trying to strengthen your psychology. So NASDAQ hit break even, no harm done. I still took partial profits, still made a couple $100, no big deal. Did we manage to get, like, how much profits did we manage to make off that trade before it reversed? About 70 pips or 70 points, excuse me. Market reversed back up, hit the break even. It was looking sketchy from the beginning. That's why we played that one conservative. If you're really confident in a trade, you leave it open, you don't put in break even, and you don't take partials. You let it ride. This had already had a massive bullish push to the upside. We had a consolidation here. And I trade a different strategy. If you're a chart addict, you know what I'm talking about. That fake to the upside, liquidity grab to the downside, and then we're starting to close back around this area. That's a sign to push to the upside. So I was already a little iffy on the trade, which is why I went lighter than usual, which is why I moved my stop loss to break even after it pushed, and which is why I took partial profits when the market made money available. Those 3 decisions made me money, even though I was wrong in the direction. Big lesson for you guys too. So you don't have to know where the market's going. You don't have to be right to make money. Let me see. you have your finger on the pulse of the market. I really appreciate your passion for helping. Maybe you guys can change the 95% of losing traders to 90% one trader at a time. Terrell, it's crazy you say that because that's one of like the things I tell my team every single time we're on the calls. Like everybody, God, I really don't want to shit talk anybody. And this is not like a dig at anyone specifically, but there are so many people that create services to take advantage of losing traders. And I'll say prop firms are one of them. The fact that 95% of the traders lose makes the prop firms a very, very profitable business. So instead of us kind of going out there and starting business ventures that take advantage of losing traders, we're going to do things the hard way, which is trying to get people who, you know, just like you really want this to work, but you have life and shit's busy and it's a lot to really get you to the point of success. But if we can just change that number from 95% of people lose to 90% to 87% to 85%, we are doing our job. And so I'm really glad you said that, bro. That's like the main thing that we focus on. Expert Trader Podcast is cracked. Do yourself a favor and watch them all. I'm telling y'all that, you know, we have podcasts in there that'll blow your mind. Naz sneaking bullish. Ivan, 100%. Ivan, what's up, my dude? Golden Nuck is being dropped. Wow. Sleep is hella important. Naz going bullish, my guy. Yeah, it is. It is. I mean, Paul, yo, put the stops and break even. It's not necessarily going bullish, but it definitely just spiked. This thing can still push to the downside, y'all. Don't get it twisted. Whenever you see an area like this get violated, so you have a previous area of support and you have mad closures below, the next candle that comes, if it starts to close below, God, there's too many things going on. If it starts to close below the support again, this thing is running to the downside, y'all. Because you're still forming lower highs. And you did have a massive break below. So until it breaks above this area, like I said at the beginning of the call, until you break above the previous high, it's not really bullish. It's just kind of spiking out. So is this a potential re-entry sitting right below the 78? Honestly, I'm considering it. I'm considering it, yo. I'm in this EU heavy. I keep saying that over and over, so I'm not going to take this. But I don't know. This thing looks like a potential re-entry for shorts to the downside. I'm just saying. If you want to really, really be sure about this, you can wait for this next 15-minute closure in 5 minutes. And if it closes below the zone, then you have a pretty good shot, this thing pushing to the downside. This is what you want to see, y'all. If you ever want to trade a breakout, trading breakouts is very risky because most of the time the market will actually pull back into the range. So for example, trading this breakout here, you know, if we didn't protect it, we would have been stuck in hella drawdown just off of that spike to the upside. But whenever you see a liquidity grab back inside the range, and then the candles close on the outside, that's some of the best confirmations that you can get for a breakout trade, is that at least the buyers tried to push inside and then sellers were like, nope, we still got control. And if you know sellers still have control, they are going to short. I broke even on NAS, US 30, 31, 550. Hold up. Oh, ooh. Damn. This looks really, really good. What a fucking entry, man. Stop playing. I didn't take it, so I have no skin in the game. I can't really get that hype. But that's the beauty, y'all. I'm telling y'all, paper trading. Even if I'm not trading something, I'll still have ideas and positions put up. And that's the move. I can see U30 pushing down. I can see U30 filling this wick. This is looking pretty solid. Obviously, we still have 30 minutes until it's hour closure, so I might be speaking prematurely. But it's looking really, really good. That was the perfect entry right there. 31,550. This is such ugly price action. Now it's still stuck, or sorry, EU still stuck at this daily zone, but looking for this thing to break. Hold up, wait a second. My bad, y'all. I really feel like I have a meeting this morning. Should have checked my calendar. Hold up. Damn. I definitely had a meeting this morning. I'm gonna forget that. See, people I have a scheduling team for a reason. I'm so bad at my own at keeping up with my own schedule. Like my own team don't even trust me. They just be like, all right, Roy, here's what you got to do today. I wake up, I check my calendar. There's a bunch of meetings loaded up on there. I'm like, okay, beautiful. Keeping up with my own calendar, not one of my strengths, y'all. Not one of my strengths. I'm gonna just be completely honest with you. So if you're watching this, whoever I had a meeting with, that's my bad. Now, a quick reminder, this stream is brought to you guys by Enigma FX. You guys can get a 30-day free trial to use this app. This is our signals app. Few members from our team, really, really killer guys, call signals on this app, myself included. If I see a signal every once in a while, I'll go in there and call it. You get a 30-day free trial. Trades like the EURUSD entry like this are called on the app. We also had some incredible trades last week with Cat Chef. Granted, Cat Chef ended up pulling all the way down. We did manage to get close to 60 pips on that trade. We had this nice, beautiful wick entry at 6444. Gorgeous, gorgeous trade, wick entry. We did manage to have a pretty nice run, and then price came back, hit break even. On the app, it was closed in profit. We closed it up here. So at the end of the day, Cat Chef closed in profit. EU entry running. So 30 days free, enigmafx.app. You guys can sign up. The sign up process is a little wonky. We are figuring it out. But this is kind of what we had to do just to make sure we got it up and running. You have to start your free trial. You'll put in your information, and then you're going to have a login. Like you create an account on the website. What you do is after you create the free trial account, you refresh. So it like locks it in. And then you can use your login on the app. Whatever username and password that you used here, you can use it on the app. It is case sensitive. That's why I say it's wonky. It's case sensitive. I don't know why. We're working on fixing it ASAP. But for now, it is what it is. But I want everybody on the Enigma app. It's a 30-day free trial. So you literally have nothing to lose. Take it on a demo account if you don't trust it. The results are posted on the app for every single trade. We have a tracker on one of the pages where you can see all of our previous trades. So I encourage everybody to go out there, check out the Enigma FX app. We're really trying to change the world here. We're really trying to provide opportunity. So it is what it is. Also, if you're a trader that has a significant win rate, if you have an above 80% win rate on trades that you take and trades that you call, if the risk and reward for the trades on average is 1 to 3, reach out to us. Reach out to us. We're looking to bring on only the best on the team. You are going to be held to a certain standard. If you don't meet those quality standards, then obviously you're going to get kicked. But if you do have what it takes, we're looking to bring on qualified folks on the team. So quick side note there. So even though we are rejecting, I can see indices pushing bullish at this point. So if you guys are in these shorts, honestly, I'm expecting price to push bullish here. I'm not in any more trades on NASDAQ, but if I had to like bet my socks here, I don't know if that's even a saying. I had to bet my socks. We already had many rejections around this level. We had a massive liquidity grab, and then we formed a higher low here. So we are starting to make this bullish momentum to the upside. I think that price could push up a little bit higher. I could be wrong. If price continues to close below that resistance, we can reassess it. But the way it looks right now, I'm not too keen on looking for a short entry. Same with U30. I feel like U30 is about to pop through the zone. Let me just go ahead and remove this just to not give anybody any sort of confusion. If you are in this trade, I'd probably just close it in BE. If you want to hold it, put your stops above the previous highs, let that thing run. But when we see this sort of pattern, this wedge, violation to the downside, and then a massive recovery where we broke above the highs. So like we already created a higher high. Then we come down and we create a higher low. This entire function from low to higher low, this is indicating a one more push to the upside. So if I had to bet my marbles, I know that's a phrase. If I had to bet my marbles, I'd say this thing is going to push bullish. Honest opinion here. DXY did exactly what we wanted. We had this massive push up. Now we're seeing a bit of a flag retracement before we make another push. So EURUSD, same thing. We're probably going to see a flag retracement up here to the 0.999 to 61, and then short to the downside. So a bit of a retracement on EU. We won't see a move here until probably another couple hours. Let that thing run. Like I said, NAS US 30 probably pushing bullish. You can either, honest to God, like these look like pretty good longs. It's a nice inverted head and shoulders sort of situation. I really feel like it's going to push up. I'm not personally going to take that risk, but more power to you. GJ, I took a short position last night. I know I said I wasn't in any trades. I was up, like I couldn't sleep, y'all. I was up to like midnight. I ended up taking a short position. I woke up in profits. I closed the whole thing, not much. It came back to retest, but now obviously, again, this inverted head and shoulders. It's where you form a floor, you violate for a liquidity grab, then you form a higher low. This in a bullish market, indication of a continuation. So I'm seeing GJ now continue bullish. I'm not really going to be looking to step in the way and short this thing. That's kind of crazy. But it's also at a daily level of resistance, so I'm not looking to buy it either. A clean break above and a retest of this 166 zone, that'll be a pretty clear trade. I'm not going to forgive myself. I told you guys, I'm never going to forgive myself for missing this GJ trade and for not getting back in. It's just one of those trades that I'll remember it for life. I remember a few key trades in my life that I let go. And coincidentally enough, I showed both of them on the charity streams. The receipts were there and I fumbled the bag on both. The first one was NZD CAD on the first charity stream. This man QB Stu showed me the trade. I loved it. It was an absolutely beautiful swing trade. And he told me to go heavy. Roy, go heavy. You're going too light. Boom, 40 lots. I'm in this trade. So for the first few days, I'm in profits. I'm feeling myself. I'm in 40 fucking lots, okay, on my funded account. I'm feeling like the man. Next few days, it goes up and down. So from profit to break even to drawdown, profit, break even, drawdown, profit, break even, drawdown. On one of the days, this thing just starts drawing down like crazy. I'm in 60 pips drawdown, 70 pips draw, and it's a swing trade. So I have my stop loss set like 120 pips away, but I'm in 40 freaking lots. All right. I am in so deep. So I had to close one of the trades before I hit the maximum daily loss. The other one was kind of floating in some losses. I was cutting back. Eventually, I was like, guys, I'm tired of holding this trade. I'm just getting out. I got it. 2 days later, the thing runs for 400 pips. Lesson, if you're swing trading, the second you turn your back on that trade is going to be when it pops. You have to allow this thing a chance to move. And so GJ is a very similar trade to that. Is price was consolidating down here. Consolidating down here, consolidating down here. I called the signal of a lifetime at 161 flat right here. All right. So from that, and the TP was 166, by the way. So this thing would have hit the full trade. Arguably would have been the best trade I've ever called in my career. That's not true, but would have been the best trade of this year for sure. 500 pips straight to the upside. What happened is I kept going 100 pips in profit and then it would retrace. It went as high as 160 pips in profit and then it retraced. Then it went in 160 pips of profit again. And I was like, no, hell no. All right, I'm protecting my trade. I put all of my stop losses in break even. Everything was in break even except for 2 trades. The market swooped down, hit my stop loss, hit all my break evens, and then pushed all the way up. This is one of those very frustrating trades. Since then, 560 pips. The period of time where I was holding this thing was 13 days. 13 freaking days. God damn. All right. So lesson, leave the thing open. Don't protect it if it's a swing trade. And really just don't bitch out. Just don't bitch out. Big lesson. Says I'm gonna wear it. I got a wristband now when I'm trading. Whenever I'm swing trading, I put on my swing trading wristband. On one side it says Chart Addicts every step of the way. On the other side it says don't be a hoe. Every time I'm a drawdown, I check my wrist. It says don't be a hoe. Do Chart Addicts members get access to Enigma or is it separate? It's separate. Completely different services, completely different teams, completely different styles, completely different services and features. Enigma is over there. Chart Addicts over here. Both are worth it. Was just curious. Yes, sir. Raul sends signals that he doesn't even take himself. I personally don't like that. And I know that it's perfectly valid. Like if you see an opportunity and you're over risked on your account, there's no reason why you can't send a signal. It's just information. All it is just market information. Hey guys, price is here at the zone. It's a potential trade. Like all we're doing is sending ideas, right? The thing is, from our perspective at Chart Addicts is skin in the game is one of the most important concepts of investing. I can tell you guys Bitcoin, buy Bitcoin, dollar cost average on Bitcoin. If I'm not putting my money where my mouth is, everything I say is fucking irrelevant. Okay, because I'm not really doing what I preach. I'm not really putting my own money on the line. So I have nothing to lose. I could say fucking anything, buy it, sell it, whatever. I have nothing to lose. So we try to only take trades that we try to only call trades that we are taking. I want to feel the drawdown. I want to feel the stress. I entered that EU with everybody else. You know, when that price spiked up, even though I'm confident in my trade, I felt that feeling. I know what y'all are feeling. I felt that when it spiked up, right? And so I feel like it's just a more honest thing, and it allows us to make more realistic decisions. Not to say that somebody else can't do it, but that's just our prerogative on calling signals that you don't take. Best live thus far, Brody. Thanks. Appreciate it, man. This is our 82nd week. So this is 82 weeks straight of doing these live streams. Love you guys. We actually started about 90 weeks ago, but we skipped a few weeks here and there because of vacations, whatever it was. So this is about the 82nd live stream that we've done. Happy to have everybody here. You have an ego that you always want to think you're better than anybody to argue against people's opinion. You're no different from anybody who's trading in this market. You're small fish like us. I mean, you're on my stream, buddy. Nobody's on your stream. So no, we are not the same. I put in more hours on the charts than you. I have taken more trades than you. I have put more hours into understanding trading than you. I've helped thousands of traders around the world. So no, we are not the same. That's just wildly disrespectful to even compare us like that. You're no different than other traders who promote their courses. Of course I promote my course. You guys just saw this shit in action. You guys just saw this information work. So yeah, I'm going to promote my course. It obviously fucking works. Why would, you know? I bet a bunch of people who saw the stream are like, he caught these great trades. I wonder how I can do the same thing. And that's what the fucking course is for. Isn't that crazy? DXY, it's going to push down potentially, but I'm still confident we're going to see bullish dollar here. Bring the homie Ted back sometime. Doesn't seem likely. I had an idea to get him and Raja on the same podcast, just sort of pick their brains. But seems like, I don't know, seems like Ted's not too happy with the industry right now. So we'll check back soon. What he meant is someone also sending the signals, but Raul also takes them just very low risk. Oh yeah, I'm not the only one sending signals on the app. Like I barely send signals on the app. We're gonna have a lot of people on the team, but I personally just don't like sending signals myself that I don't take. Is Omer on Chart Addicts or Enigma? So Omer is a co-founder of Chart Addicts. He and I co-founded this thing back in 2018. So he's 100% on the Chart Addicts team, and he also sends trades on Enigma. As you guys know, he has a 100% win rate on the Enigma app. So out of the 10 trades he sent, he's won all 10. He has 100% on his funded account. So he's probably 7 months in on one of the accounts, 4 months in on the other one, 100% win rate on both. It's honestly kind of baffling. It's statistically impossible. So yeah, Omer's a fucking goat. That's my guy. You're right, Roy. Trade ideas without execution means nothing. I'm telling you guys, anybody can analyze markets, but taking the trade, that's a whole different story. Bro, Roy's the GOAT for doing these live streams. Appreciate you, brother. Negative people will never make it as a trader, 100%. I mean, look, when people are negative, y'all, it's a reflection of themselves, right? So if someone's on the YouTube comments like spewing hate, when literally all I've done for the past hour and a half is provide an incredible amount of trading value, that's obviously a reflection of them, their quality of life, how happy they are with themselves, their ability to just deal with life and deal with things. So I'm not going to get, I'm obviously not mad, but I love checking people because people say too much dumb shit online, and this stream is not one of them. If you're going to be in here talking shit, you're going to get roasted. Now, some people want the attention. I'll just kick them out. But other people, they're actually saying stuff that can be addressed. And so I'll do it. Just buy the app, guys. We have a 90% win rate. It's a 30-day free trial. So, I mean, also this dude is a little slow. And so you can't really feel bad for slow people either. Cause it's like, damn, bro, like my boy never even had a chance. He says, LOL, I need that bracelet. Don't be a hoe. And on the other side, it's every step of the way. Trust yourself. All right. So as expected, U30 popped off. So thing is pushing now. I think it can do like a bit of a minor retest down to 31,550. So the same zone that we were looking to short from can turn into a buying zone. Kind of push this thing back up the range to 31,890. And so I think that overall US 30 pushing bullish for the session. We have a few other zones here that we can look to short from. But for now, I think that we're going to push bullish at least until 31. Let's call it 31,800 to 31,900. There's a 100-point range here. You can take partial profits at the beginning of the range. As it gets to the top, that's where we'll be looking to close the whole trade. All right, DXY, flag retracement. This thing's going to take a little bit of time to push off. NAS and U30 flipped. So just go ahead and remove this as well. GJ still sitting. And then this is what we were talking about on SPX, where we had the massive bullish swing and then a retest. This to me looked a lot more bullish than all the other indices. NAS was just the one trade, and we did catch that little spike down, and it's all we needed. Overall, pretty straightforward stuff. The way Roy switched his bias from bearish to bullish on NAS on live shows his skills and mindset and experience. Don't forget the experience part. Bruh, GJ is making me think I can't trade in the last few weeks. Whenever you feel like that, just take a step back. Take a step back and ask yourself, what are you trying to do in these markets? What are you expecting out of these markets? You expecting them to pay you every time you enter a trade? Are you expecting the market to continue in the direction every single time? Or are you being realistic about pullbacks? So if you ever feel frustrated about that, and trust me, we all get, this morning I was on there. I was like, it's like 2 trades on NAS. I was like, damn, man, like, it's a little frustrating. Same with like missing GJ and the cat chef, whatever, but you really just have to keep it moving. If you don't get back on the horse, you're just going to stay in that mindset. So take a step back, get out of all the trades, look at things from an honest perspective, and then you can dive back in. How was your sleep after that 24-hour run for the kids? Oh my God. I actually couldn't even sleep after. I had some caffeine like 4 in the morning, so I couldn't even sleep after. I stayed up. I had 2 hours of rest, but then that night I went to sleep at like 7. And just like, actually I went to sleep at like 6 p.m. I'm pretty sure. I wasted a whole day. That whole day was gone. And then the whole day after on Saturday, I was fucking beat. Do you think gold's high will hold for the week and keep dropping? I have an entry at 24 and 22. I think gold is bearish, if I'm not mistaken. I have to check this. Holy shit. Well, yep. Well, damn. Talk about aggressive. This is a pretty straightforward trade from here on out, though. Yeah, this is a pretty straightforward trade. You can look for a shallow pullback to 1710 or a pullback a little bit higher to 1715. So if you have an entry in the 20s, I think you're fucking set, dude. That's a great entry. If you have anything above the 88.6 fib, you are so set. You can move your stops to break even here, because if anything, the price can pull all the way back to the 78% before it drops. So anything above this zone, like anything in the 20s, I think you're going to be set. Markets don't move in a straight line, so you can see a pullback. Whether it's going to be this deep of a pullback, I'm not sure. Maybe just a shallow retest to 61 and drop. So 712 and 716, I'd look for those areas as potential re-entries. All right, everybody. Dan, we were on the stream for a while. Great to see everybody. An hour, 45 minutes, crushed it. EURUSD, keep it running. We're expecting a bit of a pullback here to 61 before we drop. Indices going bullish for the session. You guys know the drill. Great to see everybody on the stream. Happy and safe trading. If you guys are interested in working with us, working with myself, working with any of our coaches, $59 a month is all it takes. Head over to chartaddicts.com, chartaddictsfx.com, chartaddictsfx.com. We trade like this live probably 3 times a week. And then we go through daily calls every single day when the session closes. So chartaddictsfx.com if you guys are interested. Happy to see everybody on the stream. Look forward to seeing you guys next week. Take it easy. Peace. All right, everybody.